IonQ is not a stock you buy to feel safe. You buy it because you believe you are early, and you only get paid if the narrative becomes revenue before dilution, integration drag, or market patience collapses. IonQ, ticker IonQ, is an American company listed on the New York Stock Exchange. A public snapshot shows the shares around $49 during the trading session, with a market cap around $17 billion. Trailing 12-month revenue rounds to about $80 million, while net income rounds to about negative $1.5 billion. EPS rounds to about negative 6. Shares outstanding round to about 350 million. Beta rounds to about 3, reflecting a stock that can swing hard. The 52-week range spans roughly $18 to $85. Aggregated street posture appears bullish, strong buy with a 12-month target around $65. This is the tension, a future priced valuation resting on early revenue and heavy losses. The only mystery that matters for investors is conversion, not whether quantum computing is real, but whether IonQ can convert its early revenue base into a durable, scalable commercial engine fast enough to justify a valuation around $17 billion. That mystery intensifies in 2025 because IonQ tries to assemble a full-stack quantum platform through acquisitions while still deeply loss-making. IonQ is associated with trapped ion quantum computing. In trapped ion systems, ions, charged atoms, are confined with electromagnetic fields and manipulated to behave as qubits, the quantum analog of a classical bit. Quantum computations rely on operations called gates. Gate quality matters because errors compound quickly. Commercially, IonQ emphasizes access rather than shipping machines. Its systems are offered through cloud marketplaces such as Amazon Breakit, Microsoft Azure Quantum, and Google Cloud Marketplace. Investors like this because cloud access can enable usage-based monetization and reduce adoption friction if the workloads become valuable enough to pay for. Then 2025 turns into a platform-building sprint. On February 25, 2025, IonQ announced an agreement to acquire a controlling stake in ID Quantique. On May 6, 2025, IonQ announced completion. ID Quantique is associated with quantum-safe networking, including quantum key distribution and quantum random number generation. Quantum key distribution distributes encryption keys using quantum properties so interception attempts can be detected. Quantum random number generation uses quantum processes to generate high-quality randomness for cryptography. Strategically, this expands IonQ beyond compute into quantum-era security infrastructure. What makes this feel mysterious is that it deviates from the normal commercialization pattern. Typically, early revenue technology companies prove product-market fit in a core offering, build repeatable sales, and then acquire to expand a working commercial engine. IonQ pattern looks like build the platform early while financials remain heavily negative. That supports two plausible hypotheses. Bullish. IonQ believes long-term winners will control multiple layers, compute plus security and networking, and is racing to become a default ecosystem before standards and customer habits harden. Bearish, expanding scope increases narrative surface area and optionality, but also increases integration complexity and delays accountability for revenue conversion. Both interpretations fit public facts, which is why investors are forced into inference. On June 3, 2025, IonQ completed the acquisition of Lightsynq, positioned around photonic interconnects and quantum memory. Photonic interconnects use light photons to carry information, central to many quantum networking architectures. Quantum memory refers to storing quantum information long enough to support networking and scalable modular systems. Investor translation. IonQ is buying connective tissue for a networked future, not just a compute node. This could become a moat if productized, or a costly research layer if commercialization is farther out than a $17 billion valuation can tolerate. On June 9, 2025, Reuters coverage described IonQ plan to acquire Oxford Ionics in a deal reported around $1.1 billion. On September 17, 2025, IonQ announced completion. Oxford Ionics sits in the trapped ion ecosystem and is often discussed with a chip-based manufacturing narrative. This matters because the quantum bottleneck is scaling. More qubits, stable operations, low error rates, and systems that can be manufactured and operated economically. Buying a major core scaling capability is atypical. Normally, a company confident in its core roadmap acquires adjacencies, software, tooling, distribution, rather than the core. Acquiring core capability can signal urgent acceleration, or it can signal that the internal path needed reinforcement. The ambiguity is fundamentals linked because valuation depends on whether the acquisition improves the probability and timing of scalable paid workloads. On October 7th, 2025, IonQ completed the acquisition of Vector Atomic, positioned in quantum sensing and timing. Quantum sensing leverages quantum effects for extremely precise measurement, timing, and navigation, adjacent applications, often mapping to defense and aerospace budgets with clearer procurement structures than general-purpose quantum computing. Investor translation. Sensing may be a nearer-term commercialization bridge while compute matures. But it also adds another domain to integrate. Normally, expansion into sensing happens after customer pull or after core economics are clearer. Doing it early by acquisition can imply IonQ is hedging timelines and diversifying revenue pathways because compute-only commercialization is uncertain in timing. The financing layer binds everything together. In a November 5th, 2025 third quarter update, IonQ highlighted that it exceeded the high end of revenue guidance, emphasized acquisition closings, and underscored that after an October 14th, 2025 equity offering, it had a pro forma cash balance around $3.5 billion as of September 30th, 2025. For investors, this is a double signal. Cash reduces near-term existential risk and funds integration, but the equity offering is a reminder that the roadmap is funded by dilution until revenue scales. IonQ also emphasized technical progress in that same November 5th, 2025 context. 2-qubit gate fidelity around 99.99% and an AQ64 milestone on its tempo system. Gate fidelity measures accuracy. 2-qubit gates are crucial because they enable entanglement. AQ, often framed as algorithmic qubits, is IonQ attempt to communicate usable computational capability rather than raw qubit count. These are meaningful prerequisites, but they are not earnings. They do not answer the conversion question. Will milestones translate into paid workloads, enterprise contracts, and recurring revenue that grows fast enough to justify the valuation? That is why IonQ trades like a belief regime stock. A market cap around $17 billion on revenue around $80 million implies the market is paying for a probability-weighted future. Platform dominance and scalable contracts. That is also why beta is high and the yearly range is wide. Sentiment and narrative confirmation move the stock more than cash flows do. Technical summaries echo the uncertainty. A 200-day moving average around $53 while price is around $49. With RSI in the low 40s and MACD below zero, signals consistent with not overheated, not confirmed, bullish. In plain terms, the market is still demanding proof. Practical positioning should respect both narrative and chart structure. Short-term, avoid chasing wide ranges. Pullbacks toward the mid-40s are more defensible entry zones. First supply is likely in the low 50s, and the major trend test is near $53. Medium-term, treat 53 as a regime line and 65 as an expectation line. Long-term, size exposure as a bet on whether the 2025 acquisitions completed on May 6, June 3rd, September 17, and October 7th convert into accelerating contracts and scaling revenue supported by cash around $3.5 billion after the October 14 offering and framed by the November 5th milestones. And before you go, ValueStir is always looking for your leads. If there is a listed stock, a private company, or a soon-to-be listed name, or even a coin you want us to dig into with this same evidence-driven style, leave the ticker or name in the comments and tell us what you think the real narrative is. Also, to everyone who keeps watching, subscribing, hitting like, leaving thoughtful comments, and sharing these videos outside the platform, thank you. Your support is the reason we keep pushing for deeper research and tighter stories, and we will keep earning that trust with better content. IonQ is not a debate about science. It is a referendum on conversion. This was ValueStir.